Now let's have a look at selling of goods. Now remember, in accounting we report from the side of the business, not from the side of the customers. So when the customers are buying from us, the business is selling goods or services to the customers. So when the customers pay for our products, we sell it to them. We as the business can accept payment not only in cash but also with debit card or credit card. We can accept payment from an EFT. Also, customers can buy from us on credit, which means we sell them the goods on credit. They'll take the goods now and pay us later. Now when you hear the words sold goods, sold stock or sold merchandise, you must immediately think of the account sales. So now on the 11th, sold goods to N. Hendricks, who paid with a credit card $9,500. Now we need to identify the two accounts. Now the two accounts are sales, because we see the word sold goods, and the other account is bank because of the word credit card. Please do not confuse credit card and credit sales. Credit card is entered in the cash book. Credit sales is entered in the debtor's journal or sales journal. So we would open our cash book again, and since the customer paid with a credit card, this will go in the bank column. So now our business had a bank balance of 50,000 Namibian dollars. Mr. N. Hendricks paid with a credit card the amount of 9,500 Namibian dollars. We as the business will record that as sales because we need to report from the business side. And our balance on our bank will increase to 59,500 Namibian dollars. Also, we had a sales balance of 40,000 Namibian dollars before this transaction, and then after this sale that was done with a credit card, the sales figure increased to 49,500 Namibian dollars. So the effect will be that our bank will increase and also our sales will increase. Our bank is an asset, and since our asset is increasing, we will enter that on the debit side. And sales is an income, and our income is increasing, we'll enter that on the credit side. Now let's complete our transaction. First, we need to enter a new account, and that account will be sales. Then we would debit our cash book with 9,500 Namibian dollars. The description in the details column would be sales, and we would enter the 9,500 in the bank column. And if we debit our cash book, that means that we will be receiving money. To complete our double entry, we would credit sales with 9,500, and the details in the description would be bank, and that will complete our double entry process. So to wrap up, if we buy goods from our supplier, we will call that purchases, and if we were to post in our purchases account, we would post to the debit side, since purchases is an expense and our expense is increasing on the debit side. And if we sell goods to our customers, we would classify that as sales, and in our sales account we would enter the transaction on the credit side, because sales is an income and our income increases on the credit side.